Hey, good afternoon. It's Jim from JAGfx.com. It's Tuesday, the 17th of December 2024. This is just a video during the series of videos this week. This one's on the loss recovery method. Now, there's two of them. We'll get into it. I'll show you what I mean. So, if you do like these videos, or you got some questions, etc., just hit the like button, hit the subscribe button. It's always appreciated. Feel free to ask me any questions in whether it be the Telegram channel or the Facebook groups, etc. More than happy to answer any questions. I sort of rushed through a few things yesterday. Hopefully we'll pick up where we left off. So let's have a look at the Word document. Now, a lot of this is going to be a little bit repetitive from yesterday. Yesterday I spoke about hedging. So that was the multi-sequence hedging and the traditional hedging. Now, like that, exactly the same, all initial first trades are taken on a valid buy or sell signal using the high probability trading method. So nothing changes. That means the QMP filter dot with a MACD platinum on the correct side of the zero level. It's exactly the same. It's what I call every day for the last few years. That's always your first trade. It's got to be a valid setup. And all I can hear is a dog barking now, which really annoys me, but it is what it is here, Camp Buddy. All right, now it's up to you whether you want to do this or not. I'm not forcing anyone to do it. I'm just showing you different ways of managing trades. You can take exactly the same trades, place a stop loss. You could use different position sizing. You could use a different time frame. You can use different pairs. Do whatever you wish. I'm just showing you what works for me, what time frame and what pairs. All right, so you've always got to have a plan if things go wrong. Generally, when you take these trades, probably about 50% of them will go in the right way initially, or the right direction. And it's the 50%, there goes the one. It's going to be real annoying, isn't it? Because I need my platforms open. About 50% won't go the right way. They're the ones you have to have the trade management. That's the ones you have to have the plan for. Just don't stick your head in the sand and hope it'll all come back. Have a plan, execute the plan. Simple as that. All right, so if the initial first trade goes in my favour, well, I can take some trade action, reduce my risk, etc., like close half and put a stop loss in place. That's great. Just do that. Treat it like any normal individual trade. There's no need for any fancy trade management techniques. I went through all this yesterday, so it's all good. You've got to have a plan. That's what I said already. All right, just remember that all these techniques I'm discussing are high risk. And not for everyone. Some people can't do them. Some people aren't comfortable doing them. You've got other rules in your jurisdiction, whether you can't hedge because you live in the US or you've got the first in, first out, the FIFO rule. There's a lot of restrictions. Some people just aren't comfortable trading with increasing position sizing, martingale, hedging, dollar cost averaging. I get that. You don't have to do it. Like I said, it's not for everyone. Just be sensible if you do it. Don't have unrealistic expectations and watch your initial trade size. When you first start out, keep it small. You can always build up and ramp up later once you get confidence and once you see what pair is working, what time frame's working. Applies to all these trade management techniques. You want an account with decent balance, or if you haven't got a decent balance, say you've only got $100 or something, you could throw it into a cent account or a nano account or something like that and trade small. You want high leverage, high as possible. Not always necessary, but leverage is not the enemy. It's only people that abuse it that becomes the enemy. It's people that are smart about risk management, and I'm hoping everyone in my group is smart enough to understand risk management. I've been going on about it for forever. Every book I mention it, so it should be ingrained into your heads. And it's also good if you can hedge, go both long and short at the same time, the same pair. All right, these are high-risk strategies. You don't have to necessarily follow me, all right? So don't follow me blindly. Do your own back testing. Do not ask me, Jim, does this work on such and such a pair on this time frame? I'll tell you the rules. Go and test it yourself. It's not hard. The indicators don't read paint. Just go back in the historical charts or use a simulator. It's easy to test. There's no reason you couldn't day trade this if you picked the right pairs at the right time, avoided big news events, or set it up so the news event helps you. There's ways of looking at this. Don't just follow me. I'm just giving you a framework or a heap of ideas. Take what you like of those ideas. I had a discussion with someone, made a comment in my hedging video on YouTube, and he does a complete different sequence and a different outlook to me, which is great. I like to see that, where people take stuff, make it their own. All right, with regards to the sequence of trades, I use 1, 3, 5, 8, 13. I cap it at 13, which means that's the maximum size. Now, 1 is just a multiple of 1 time. So if my initial trade size is 0.1, then my second trade is 3 times that, so 0.3. My next trade is 5 times that, 0.5, and 0.8, and so on. You don't have to do it. It's loosely based on the fib numbers. You could use the proper fib numbers, 1, 1, 2, 3, 4, 5, or you could use 1, 1, 1, 1, 1, 1, 1. Up to you. With this loss recovery, you'll probably do it pretty well just with 1, 1, 1, 1, 1. You'll see it if you pick the right pairs. You'll recover a lot of your losses. You might not recover all your losses, but you'll have more wins than losses if you pick the right pairs on the right time frame. I've done all my testing on 1, 3, 5, 8, 13. So it's not traditional martingale where you double after every loss. It's not quite that. The first one's a big jump, 1 to 3. I guess it's 3 times. But 3 to 5 is not, obviously, and 5 to 8 is not. 8 to 13 is not double. So. Right, I already mentioned about that. Asked me about other time frames and that. All right, we all want to just make money. Now, what you do with that money is up to you, but what we're trying to do is make money. So I do take all these different styles of trading on my accounts because I know I'm a full-time trader. I've got plenty of time on my hands. I live by myself. I'm in a pretty good routine. I live in a good time zone for checking the daily charts, living in Southeast Asia. It's not a big problem for me at all, and I've been doing this for a long time. I've been trading Forex since February 2002. So you think I should be a multi-squillionaire sitting on a tropical island somewhere, but I'm not, but that's another story. But it's all good. All right, so we've already covered the multi-sequence hedging. To go hand in hand with that, I use the same pairs for the loss recovery on the QMP filter. So it's start again. It's LRQ, loss recovery QMP. That's all that stands for. So these are the fast moving pairs: Aussie USD, Bitcoin USD, Euro USD, Pound CAD, Pound Yen, Pound USD, and XAG USD, which is silver. You could swap that out with gold. I just trade in silver at the moment. These are generally nice trending pairs that can move a long way in one direction on a regular basis. We'll see that when we look at the charts. Now, the traditional hedging we also covered yesterday goes hand in hand with the loss recovery on the MACD Platinum. So instead of the loss recovery QMP, we do loss recovery MACD Platinum. I'll explain these once we get on the charts. And again, here's an example of these pairs: Aussie Swiss, Euro Aussie, Pound Swiss, New Zealand USD, USD CAD, USD Singapore dollar. So these are sort of middle of the road pairs that have some decent moves in one direction, but also go into consolidation at times. So I should dollar cost averaging. So yeah. So just be aware of those sort of pairs you trade. Pretty much the same as yesterday. The fast movers, the big ones, we'll go with the QMP filter dot, and with the slower movers, we'll go with the MACD Platinum for the loss recovery. So as long as you understand, it's high risk. Let's get into the charts. All right, so let's find my... Right, got the Pound CAD daily chart here. All right, so that was in that top list. So this is the loss recovery based on the QMP filter dot only. So I'll just start here. This is current one. All right, so we'll go far as left possible. Hang on a sec. I'll just move across a little bit because I think that might be... No, you idiot, Jim. Right, we'll start on the left here. This will give us the current pound CAD. So I'm not cherry picking anything here. We're going to have a look at any random spot in the chart you want. So here's your sell trade. MACD platinum above the zero level, red QMP dot. Now, I probably didn't mention yesterday, we've got this, nothing, and again, this is exactly the same setup as yesterday. QMP filter is just the default settings, 183 for the QQE advanced component and 1226.9 for the MACD platinum component. This yellow dotted line is a 20 moving average. It's a simple moving average, 20 simple moving average. All it is the center band out of a default Bollinger Band, which is normally, with them default settings on the Bollinger Bands, 20 and 0.2. That's your center band. That's all it is. Now, you could use this for a couple of ways. There's one way of doing it. I didn't mention this yesterday. This is a valid sell signal, all right? Doesn't matter what. But say, for example, it was given on this candle here, where it closed on the bottom side of the moving average 20, you may have declined to take that trade. In this case, it closed above it, which is good. And as soon as it closes below like this, I'm taking some action. MACD platinum is also very close to the zero level, so there's a double whammy there. I'm either looking for the price to close with some profit on the other side of the moving average 20, or the MACD platinum, the reddish line to go through the zero level. In this case, that's a winning trade. Doesn't matter which way you look at it, manage it, you can't lose on that trade. All right, I'll take this buy here. It goes up, closed above there, closed above the 20 moving average. Just put a stop in place, make sure you don't lose on that trade. As soon as it closes above that moving average, even though the MACD platinum is not through the zero level, just take your profits, or take a partial, put a stop in place. Don't necessarily put it at the point of entry. You can put it down below the low there. You probably would have still been stopped out. But it doesn't matter. You may have got out on the opposite QMP filter dot. So here's a red dot. It's not a valid sell signal. Ignore it. Here's the buy. Take it. Again, we close above. Can't lose on that. So your stop's down here. This is going to be a nice trend up. Right, now we get into the loss recovery stuff. Well, not yet, I don't think. One thing, I should have picked another pair because the pound CAD's too good for this sometimes. I might have to go to another point in the chart. Right, took a sell here. No stop is placed. No stop. And even though we closed below the MA20 here, we're still not below the entry level. So I'm just ignoring that and wait for the big through the zero level in the MACD platinum. And you probably start looking at putting your stop or closing half in here somewhere. Another option would be to put a trend line across here. Got to draw a better trend line, don't I? Let's do it. Hang on, I'll pause the video for a second. All right, just draw a better trend line so you can see it. Just draw a trend line across these lows here. You can see when price is going up, still got this red dot here. Price is going up. You gives you 1 point here, touch point there. Just draw a trend line across there. You can see the MACD platinum is going down. Closes below that. You can take another trade if you want. That's just an example. All right, we're not getting into the loss recovery here, are we? Buy here, that's a winner. Sell there, that's a winner. Buy there, that's a winner. All right, here we go. Sell. No, you're probably out of this because the MACD platinum goes through the zero level. We've got to find one. Buy, that's a winner. Sell, that's a winner. Buy, that's a winner. Sell's not a valid. Buy. Here we go. All right, found one. Didn't take long, did it? So they're all winning trades. Can't lose along anywhere from there. All right, here we go. Look at the buy here. Now, this is an example of where it's not a great buy signal. A couple of reasons. One, the MACD platinum is already close to the zero level, even though it's below it. And two, you can see that price is a long way above that moving average. So it's on the wrong side if that was one of your filters. But I'm trying to use this as an example. We took a buy here, then it went nowhere, got this opposite QMP filter dot, take the sell, This buy would be for 0.1. Get the sell signal here, close that buy, take a sell for 0.3. Then you'll have two targets. One target is for where you can just get out of break even. So it's basically you work out the number of pips you lost between those two, the open and the close, and then you just divide it by 3 and you take that away from your entry point. Or if you wanted a second target, target 2 as I call it, where you could sort of do a little bit of trade management. And so you get a big move like this down, you'd probably get away with, if you didn't come back and check your chart for 24 hours and your price is down here, you could probably do a partial close and just put a stop in place where you could then get more profit from that, because it's a pretty good valid signal there. So I'm going to have to go back in time and find this, because that was absolutely, I should have done that, check that. Let's have a look, see if I can find a couple of places where. So this pair is just, there we go, right up. A little bit messy. Here's a big downtrend. We'll see what we can get here. And we'll get into this area here. All right, so we've got a sell here, valid sell signal up here. Look here. It didn't close, MACD pattern didn't come below the 0 level. We'll bring it across a bit, put it in the middle. This is here, same here. So sell signal here. Took the buy. So we'll close that sell. Now, I'm going to say one other thing here. I don't want to confuse you. You can leave that buy, that sell trade open if you wish. I don't. I close it. You can leave it. It's up to you. With the same sequence, it'd still be 1, 3, 5. I close it. So we took the sell there. We got an opposite signal, a buy. So we close the sell, take a buy. So that buys for 0.3. You go and work out your maths where your target 1, target 2 is. Write up your spreadsheet, which we'll get to in a minute. I'll show you. Then you work out your targets. And as Murphy Law would have it, we've got another sell signal. You close that buy. So that was for 0.1. If this was for 0.3, this new sell will be for 0.5. And it's good too, because it's an actual valid sell signal, even though the buy wasn't, we still take it. And we take it, and look at that. We just recover that easily. All right, now this is what we want here. So that's a winner, but it took 3 trades to become a good winner. All right, here's another one. Took a buy here, valid buy signal, MACD platinum below the 0 level. Went into sell mode, closed the buy, took the sell. Do up your spreadsheet, do your maths. It's gone nowhere in the sell mode. We've got another buy, take the buy. Close that sell, take the buy. And there will be times where you'll still be down and you will a trade will recover some of your loss. If that's ever the case, where you have a trade that does recover some of your loss for whatever reason, there's nothing to stop you just taking that, and then the next trade, you don't go up in the sequence, you just take the same size trade again. So if this was the case here, it'd be 1, 3, 5, and say you recovered some there, then this one here would be also 5. Now, it's up to you what you do here. Now, what I would do, we've got a buy there. It's obviously a loser. Take the sell. I don't think that would have recovered all that previous loss. And we took the buy here, and I'm not thinking that would recover it. It may come close because there's not much of a move in there, but say it didn't. Now we've got the MACD platinum above the 0 level. We've got a good signal here. We've actually got hidden bearish divergence from there to there and from there to there. We're in a downtrend. So I'm commencing, not only is this trade 4 on this sequence here, this is also the start of a new sequence. So I'm basically doubling up on this trade. Well, I won't be doubling up because that'll be 1, that'll be 3, that'll be 5, that'll be 8 for that sequence 1. Then this will be just 1 for that new sequence. And look at that, that just drops down nicely. And I can guarantee you, you would have recovered all your losses there easily. Then we go to buy mode. You're probably going to get unless you took another trade on a trend line break, you're probably getting out in here somewhere. If not, you take that sell there, and again, you could take another sequence, commence another sequence, because the MACD Platinum's on the other side of the zero level. And take that down, I guarantee you would have recovered that. Here's a good example. Buy here, it's just a valid buy signal. Sell, I think you might actually got out there. Let me have a look. So that's 211. You just have to go down 211. I mean, it has to go down. What's half of 211? 100. Geez, Jim, 105, 106. That's embarrassing. So you would have recovered that anyway. But say we didn't take the buy there, you would have recovered on that one. If you didn't, you definitely recovered on this sell trade. And in the meantime, you're taking new sequence trades. So this is on every QMP dot until you recover the loss. But don't be afraid of taking, if that's it, if you're comfortable with it, don't be afraid of taking a second trade, like commence a new sequence. So took a buy here, that's a winner. Took a sell there, that's a winner. Buy, yeah, depending if you got out here or not. The MACD Platinum through the zero level, I'll be looking to get out. All right, took the sell there. Now, again, this is one of these where it's a long way below the 20 moving average. Whether you take it or not, it's up to you. But say we took it. It's a little bit messy. Take the buy there. You probably recover it. Yeah, what are you out there? May recover it. Sell, you're not going to recover it. But again, you can start commencing another sequence. Another buy, sell, and eventually, this, if you hadn't got out of any of these trades anywhere in here, you could run it up there. All right, just had to pause for a sec there. So yeah, you would have recovered on that big move up there for sure. You might get a little bit stressed in here. And look, I'm not saying you wouldn't recover in here somewhere. I'm just not going to do the maths in the video to show you, but definitely on that move up there. Winner, 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 winner. All right, that's long enough on the loss recovery for the QMP Filter. Let's get on to the MACD Platinum. Now, this is the new, USD CAD. So this is one of the pairs on that list. I'll find a crappy spot this time, so I don't. All right, in here, let's have a look in here. This is USD CAD, daily chart again. So again, we're taking valid signals, and only valid signals. So here's a good example to start with. Took a sell here. This is a valid sell signal. Now, assuming we didn't get out, like you could probably make an argument you probably get out, start managing your trade in here somewhere. We did get in the entry just below the 20 moving average, so we'll say we didn't. We got an opposite buy signal here. We actually got out with a small profit, so it doesn't matter. But we ignore that buy signal. Even if that was a loss, we'd ignore that buy signal because we're on the wrong side of the MACD Platinum. Take this sell up here. That's the next valid sell signal. Again, there's no real place to get out or manage to trade there. There's an opposite buy. Close the sell, take the loss. Do not take a buy. It's not a valid signal. The MACD Platinum's on the wrong side of the zero level. Take the sell here. So this is trade 3. If we were this sequence of 3 trades, that'd be 0.1, that'd be 0.3, this would be 0.5. Again, do the spreadsheet, work out your maths, bring it down. That would be enough to recover from these 2 previous losses there, for sure. Keeping in mind that's a bigger position size. Valid buy, can't lose on that. Here we go again. Sell, first trade, MACD Platinum still above the zero level. Buy, close, ignore the buy, so we're just out of the trade. 0.1, that's 0.3. Take the sell. Now, I'm not sure if that's going to recover. Let's have a look. I'll work a quick look. 210, so we're looking for a move of at least 105. Shit was touch and go, so it didn't recover. we take this buy here, power tool starting now, take this buy here, because now the MACD platinum's on the wrong side of the zero level. We close the sell, take the buy, it goes down, it's a sell signal, we take the loss there. So it's getting a little bit confusing now because now we've pivoted. We've gone from the sell, we're now in buy mode trying to recover the loss. Here's another buy. It goes against us, it's a sell. Here's the buy here. This will be, so that'll be 1, 3, 5, 8, and this will be 13. And this is the one that'll get you out. I can guarantee you that's enough to get you out in a winner. It's a bit of a pain, but that's the way it is. That's why this pair I don't like trading. It's USD CAD. So here's one here. Sell, probably out there on the moving average on the other side. That's not valid. Sell there. MACD platinum through the zero level, out of that one. Is a valid buy. MACD platinum through the zero level, so out of there somewhere. Sell. Closed on the other side of the MA20, so you're out of that one. Buy, here we go, buy. Opposite sell. Close. Next buy. Might not get any, you might not have a win there either. Sell, you ignore that, just close out. This buy here is ugly as. This is the problem with the daily CAD, daily USD CAD. It can get real ugly. Here's another buy in here. It's not really a valid buy signal because the MACD platinum's close to the zero level there. It's just about through. Can't believe this power tool start up when I'm doing this video. Damn. You could pivot, take the sell. You're not going to recover there. Again, we'll pivot again, take the buy. Sell, out, buy. There's your recovery. So that's a lot of work in there just to recover on this one. Remember, you're capping at 13. I don't think you'd get to 13 there. All right, I got to wrap this video up. But in the meantime, look at this. Winner, winner, winner. And that's sort of valid signal. And here where we are now, sell, sell, and pivoted to the buy side. So we're on the buy side now. Yeah, this background noise is annoying the hell out of me. All right, we'll just have a quick look. I'm in Bitcoin trade, so we'll have a look at that. Right. So here's Bitcoin on TradingView, just to give you an example of where we're at. Here's 2 old trades, sequence 2 and a loss recovery. Entries there, stop losses there. So these 2 trades here, Bitcoin, entry down at 72,000 and what's that, 84,000 something. So looking good. And Bitcoin at the moment is at 106,000, just under 107,000. So can't lose on them. Multi-sequence hedging, sequence 1, sequence 3, sequence 4, sequence 5. Overall break-evens, this yellow line up here. 2 loss recovery trades, those yellow dotted lines there. There's my notes. I've got to rush through this because that power tool's just about to start up again. And there it goes. And plus we're getting about 28 minutes on the video. Now let's have a look at the, what am I looking for? Word document. So there's all my multi-sequence hedging trades. There's my break-even. This is on BTC. There's all the dates, all the sequences, the trades. But more importantly, here's the loss recovery. So I took one trade, had a loss of $349. I'm going to start rounding these up on Bitcoin now. It's no use worrying about the cents. Second trade was for 0.18. It was a loss, $482 or $483. Third trade, 0.3 and a loss of $1,264. Now my targets are 105,464, 106,083, which we're up at the moment. We're past that. So I can close out those trades and recover all those losses. That wasn't too difficult at all. And just to show you where they are on this is the platform I trade my Bitcoin on. I might have to actually separate Bitcoin from my spreadsheet, because it's really going to throw the numbers out with a big profits it makes. Probably over my position sizing is probably too big for this account, I'd say. But that's the profits. There's that loss recovery trade 4, 2,708. And if you look at, where's my platform? What's that? 2708. And all I need is 2097. That's my total loss. So there's $700 profit there, easy. All right, boys and girls, I'm sorry about all the background noise. I sort of rushed a bit through that hedging. I'm getting lose my brain here, lose my mind. Rushed through that loss recovery on the MACD Platinum. I might do a second video to explain that a little bit better and do some numbers and just be a little bit more clearer with that. But if anyone's got any questions or I confused anyone, sorry about that. I'll talk to you good folk later. Thanks for watching. Cheers.